think understanding psychology in trading is really important. When you enter financial markets, there's a lot of emotions that can be elicited by the quick movements that you see, the opportunities that you find to profit and loss, and it really can overwhelm your rational decision making. Now, I think there is a bit of a fallacy that we are always rational as human beings, and that's not always the case, but having a bit of an understanding of your psychology so you know why and when you're making decisions that you are helps you control your emotions and make sure that you can stick to rational decision making. Naturally, when you're dealing with money, you're prone to, as the cliche goes, real extreme bouts of greed and fear when you're entering and trading in financial markets. Now, emotions can't drive your trading. If they do, it is when you start making some bad decisions. So learning to understand your emotions is really valuable to be able to know when and why you're doing certain things, and make sure you're trading for the right reasons and making the decisions that you are because they are indeed in your best interests, and you're not putting too much risk up for rather limited reward. Trading is really like running a business with any other financial plan. You have to have an entry, you have to understand what risk you're willing to take. You've got to manage that, know how much money you're willing to make, when you're willing to walk away, and importantly, how much you're willing to lose too. So in situations where things do go awry, knowing when to walk away from things is very important. Now, you can't control what the markets are doing. That's why it is as exciting as it is. That's why it's engaging as it is. But the thing is, you can always control how much money you make or how much money that you can lose by understanding when you exit the market at a particular point in time. So you've really got to have a plan to really start with when you are trading, to know what you want to get out of it, be happy with what you've got when you do achieve it, and then if you do lose, only lose what you are able to afford to lose, so you can go back to the drawing board and have another crack at things again. Learning to trade is like any other skill. It takes time, it takes resilience, it takes a lot of patience, and it's a very slow process. I think sometimes we walk into these things and trade on financial markets thinking that it's easy, we've seen it done before, and that it's a quick way to make a buck, but it's not. There's a skill to it, and it does take time to get good at it. So understand that always the best traders do lose money at the start. You absolutely will. Making sure that you don't lose too much while you're going through that learning process so you can work out your method of trading is very significant too. And ultimately, you really just need to be patient, make sure that you do things slowly so you don't risk losing too much, and that over time you can become a more successful trader by being more efficient, more effective when you place a trade, and then of course quite naturally more profitable.